Hey, what's going on, everybody? This is Tyrone back with Tech Life. And here I have a great article for you guys from investing.com. I'll leave a link to it in the description so you guys could check it out. So, T Mobile is set to report their third quarter earnings on October 25th. And there are some great points in this article that I wanted to go over and I wanted to get your guys' take on in the comments. So, you guys have seen I hope you guys have seen two of my videos, The Truth About T-Mobile and The Worst Is Yet to Come. And the reason I made those videos is because if you look at everything that T-Mobile has discussed, the way that they're acting now, you can see where this is headed. It doesn't take a rocket scientist to figure this out. It's very simple. T-Mobile is slated to announce its third quarter earnings results on Tuesday, October 25th, following an 8.77% earnings surprise in the previous quarter. The forthcoming announcement comes amid expectations of a revenue contraction due to intensifying competition and weak demand. So again, that's a problem. That could be a problem for T-Mobile because they are still purely wireless. They don't have another business to rely on to pick up for them because they're still underpenetrated in all of the other segments. So keep that in mind. So in the recent developments, the wireless carrier has been involved in several initiatives aimed at strengthening its market position. Notably, T-Mobile extended its partnership with CellGP until 2025. They've implemented 5G hybrid networking. So they're pretty much pointing out every partnership that T-Mobile has done on the Pixel side, and pretty much saying that hasn't really helped T-Mobile, in profits. So despite these efforts, profitability challenges loom over T-Mobile. Factors such as competition, low price service plans, promotional activities, and high debt obligations could affect the company's bottom line. Analysts expect a year-over-year decline in both branded postpaid and prepaid average revenue per user. So again, you guys, for those of you who saw The Truth About T-Mobile and The Worst Is Yet to Come, you can see it. Despite the efforts, profitability challenges loom over T-Mobile. Right? So what does that mean? Are we going to see the growth? Sure. Are they going to post 800,000? Yeah. But it doesn't really translate to big financials. AT&T grows a bit less, right? They did 468,000. They will probably be less. And they still post a stronger financials. Higher percentage of growth on ARPU and average revenue per user on, prepaid. I didn't check that. But regardless, they still post stronger financials. So that's a problem for T-Mobile. How do they fix that? They start force migrating customers. They start introducing higher price plans. Maybe they take taxes and fees away in the future. Maybe they add more fees onto your already newer plans. Right? It now more than ever, it's a stronger possibility that they make these moves than ever before because of where they're positioned. The market is going to eventually react negative that T-Mobile continues to grow the way they are, but then they don't post the higher profits. At the type of growth that T-Mobile gets and how many customers they have total, they should post the most profits, but they don't. And that's the problem. And that's why I say the worst is yet to come. If T-Mobile was already posting the profits and they didn't have any issues on the quarterly earnings with all the growth that they're getting, I wouldn't be saying that. I'd be like, okay, it's fine. They're good. They make some tweaks here and there and they should be fine. But they're spending a lot of money. They're still spending tons of money to gain the customer. That's an acquisition cost. Right? So has the network really helped them grow? It's helped some, but they're still having to remain competitive and very attractive with high acquisition costs. They're having to spend thousands of dollars on phone subsidies. They're still doing free lines. to some accounts. They're still doing discounted lines to the newer Go 5G plans. They're still doing insider discounts, I'm told. That's probably going to ramp up in Q4. So they're still doing that. So all of that costs them profits. It cuts into the profits. They're buying up, spectrum that's way more expensive than they probably would have paid for in 2017. All the spectrum that they're getting now after the fact would have been cheaper if they bought it during the auction in 2017. Right? T-Mobile paid $8 billion for a national average of 30 megahertz of N71 or 600 megahertz. Just alone, what they're spending on the chunk that they're getting, which is not nationwide, from Columbia Capital and then Comcast in the future, is going to be $7 billion total. Just for that, and that's not national. So they're making some harsh decisions, right? They're making some bad decisions there, in my opinion. If they would have, granted, they maybe they didn't have that much back then, but I think they could have went $2-3 more billion in debt in 2017, and they could have bought more 600. But they didn't. We can't go back. This is what's now. They're having a tough time with profits, so they got to charge more. It's that simple. So eventually, legacy plans, if you're not migrating, you're probably going to get a fee increase. It's bound to come. I could see it now. $1, $2, $3, whatever. I can see that coming. For those that opt out, you won't be force migrated, of course, because there is an opt-out option. But eventually, as time goes on, you probably will endure a fee increase. I guarantee it. I'm very confident in that. Like I said, T-Mobile is moving very differently now. And the fact that these profits are hurting them that can't go on forever. Right? They're still making some poor financial decisions, I would say. Like buying Mint Mobile, I don't think that was needed. They're already in a great position. They have Metro by T-Mobile that they can go and compete with as in terms of the lower value segment. They're spending a ton of money on marketing there. Why buy Mint? What does that do for the company? Is that maybe the digital brand that they were looking for? They could take Metro by T-Mobile and go digital, in my opinion. But, that's something that they decided. I don't know if that was necessarily a great idea. That $1 to $2 billion that they're going to spend on Mint Mobile, they could invest into C-band and DoD and grow the base and grow Metro by T-Mobile that way. More capacity, grow the base on Metro by T-Mobile. But those are just some of my thoughts. Maybe T-Mobile has made some poor financial decisions. Most of you won't see it that way because it is new spectrum that will help grow the base. But if you really break it down and look at it, they made some poor financial decisions, starting with the additional 600 Mint Mobile. Was that really needed? Right? Just think about that and let me know what you guys think. Make sure you guys stay tuned for more. Like, share, subscribe. Follow my social media outlets. This is Tyrone with Tech Live. See y'all in the next one. Peace.